You are currently losing a war you do not even realize you are fighting, and the opponent is not a person, but the very way you perceive time and value. Imagine this: it is 2 a.m. You are staring at a glowing screen, heart racing, watching a volatile stock ticker fluctuate by pennies. You bought into that trend you saw on social media because an influencer promised it was the next big thing. Now, you're checking your portfolio every 15 minutes, losing sleep, and watching your hard-earned capital erode as the market swings against your emotional decisions. You feel like a genius when the numbers go up and a failure when they crash. But here is the cold, hard truth. You do not need a degree from an elite institution or a subscription to a high-end terminal to build long-term stability. You just need third-grade arithmetic, a bit of patience, and the courage to stop playing a game designed for you to lose. Most people spend their lives chasing the next big move, convinced that if they just find the right stock, the right timing, or the right signal, they will secure their financial future. This is the ultimate illusion. You're essentially trying to outsmart thousands of professional analysts who have access to information you will never see and algorithms that operate in microseconds. Every time you buy an individual stock based on a tip or a headline, you are placing a bet against the collective intelligence of the global market. The math is simple, but the psychology is brutal. When you pick stocks, you're fighting against the odds, and history shows that over a 20-year horizon, over 90% of professional fund managers fail to beat the basic market index. If the pros cannot do it, why are you convinced that you can? Let us strip away the noise and look at the raw mechanics of the S&P 500. This is not about getting lucky. It is about owning a piece of the 500 largest companies in the United States. When you buy an index fund, you are not betting on a single horse. You are betting on the entire track. You are buying the infrastructure of global commerce. If a company in the index fails, it is removed, and a new growing company takes its place. The index self-cleans, it evolves, it reflects the aggregate productivity of the economy. While you're busy sweating over a single volatile stock, the index is silently compounding, fueled by dividends and the collective effort of millions of workers and innovators. This is the engine of long-term capital growth, and it requires zero effort from you once the system is in place. The power of compounding is often misunderstood because it feels too slow at the beginning. In the first year, your gains seem negligible. You might look at your statement and wonder why you bothered. But look at the math over 2 decades. If you consistently allocate a portion of your income into a low-cost broad market index fund, you are not just saving, you are planting a forest. The beauty of this approach is that it is boring. It is intentionally boring. It does not provide the dopamine hit of a volatile trade, and that is exactly why it works. It removes your emotions from the equation entirely. You stop being a spectator of the market's chaos and start being a participant in its long-term expansion. Think about the cost of your current strategy. Every time you trade, you pay fees, you suffer from slippage, and you trigger tax events that eat away at your principal. You're essentially paying the brokerage firm to help you lose ground against inflation. By contrast, a low-cost index fund is designed to minimize these frictions. It is the financial equivalent of a high-efficiency engine. You're not trying to beat the market, you're simply trying to capture the market's return, which historically has been sufficient to build significant long-term stability for anyone who stays the course. The secret is not a secret at all. It is just discipline disguised as math. Before we dive deeper into the exact mechanics of how to automate this process and reclaim your time, if you find this perspective on financial clarity helpful, take a quick second to hit the like button and subscribe to the channel for more deep dives into the mechanics of long-term stability. It helps us keep creating these detailed guides for those who prefer logic over the noise of the mainstream financial media. Now, let us discuss the pragmatic solution. The goal is to build a system that runs without your intervention. This is what we call the simple math pivot. You automate your savings. You set up a recurring purchase that triggers the moment your paycheck hits your account. You do not look at the price. You do not check the news. You do not worry if the market is up or down this month. You buy, you hold, you repeat. This is the philosophy of the set it and forget it investor. By automating, you remove the human factor, which is the most dangerous variable in your portfolio. You stop trying to time the market and start respecting the time you have in the market. Consider the psychological weight of your current routine. By constantly monitoring your investments, you are living in a state of perpetual anxiety. You are letting your screen dictate your mood. When you switch to a broad market index fund, you're effectively opting out of the rat race. You gain back hours of your life that you previously spent researching tickers or watching charts. You can use that time to develop your skills, spend time with your family, or focus on your actual career. The irony is that by doing less, you end up with more. You are no longer a slave to the volatility of individual assets. You are a partner in the growth of the global economy. Let us look at the numbers. If you invest a consistent amount every month, regardless of whether the market is at an all-time high or in a correction, you are practicing dollar-cost averaging. When the market is down, your money buys more shares. When the market is up, your existing shares gain value. It is a win-win scenario that eliminates the need to predict the future. You're essentially smoothing out the bumps in the road. Over 20 years, this consistency creates a compounding effect that is mathematically superior to the buy-high, sell-low cycle that most amateur traders fall into. Why do so many people refuse to do this? Because it is not exciting. It does not make for a good story at a dinner party. You cannot brag about your index fund strategy the way someone brags about a volatile crypto pick or a risky stock option. But remember, the goal here is not to impress your peers. The goal is to build a foundation that supports your life, not one that consumes it. The math does not care about your ego. The math only cares about the duration of your investment and the consistency of your contributions. As you begin to see your balance grow without your constant oversight, you will notice a change in your mindset. You will feel a sense of calm that is rare in modern life. You are no longer reacting to the world. You are building your own buffer against it. This is the essence of true financial autonomy. It is the ability to walk away from a job you dislike or a situation that does not serve you simply because you have built a quiet, reliable engine of growth in the background. People often ask about the risk of the market. They point to crashes and economic downturns. But the real risk is not the market. The real risk is your behavior. The market has always recovered and reached new highs over the long term because it is tied to human progress and innovation. Your behavior, selling in a panic, buying in a frenzy, trying to pick winners, is the only thing that can truly derail your progress. If you can control your behavior, you have mastered the only risk that matters. Think of your portfolio as a garden. If you dig up the plants every few days to check if the roots are growing, you will kill them. You have to leave them alone. You have to let them exist in the soil exposed to the sun and the rain, trusting that the nature of the plant is to grow. Your index fund is that garden. It needs time, it needs patience, and it needs you to keep your hands out of the dirt. Let the compounding do its work while you focus on living a life that you actually enjoy. As you refine this system, you will find that your lifestyle creep begins to vanish. Because you are not obsessed with winning in the market, you are not obsessed with winning in consumption. You realize that you do not need the latest gadgets or the most expensive status symbols to feel secure. You have something better. A growing piece of the world's most successful companies working for you. 24 hours a day, 7 days a week, even while you sleep. Ultimately, this is about reclaiming your agency. You have been told that you need to be a trader or a financial genius to have a secure future. That is a lie designed to keep you clicking, watching, and trading. The truth is far more liberating. You can be an ordinary person with an ordinary income, and through the simple, boring, mathematical inevitability of index investing, you can build a life of immense stability. You do not need the market to be easy. You just need your plan to be consistent. Stop losing sleep. Stop checking the tickers. Stop betting against the professionals. Open a low-cost brokerage account, choose a broad market index fund, set your automatic transfer, and then close the app. Go outside, read a book, work on your passion. The math is already working for you. You have already won the game before it even really started, simply by refusing to play the one designed for you to lose. Your future self will thank you for the boredom you chose today.